Hi, everyone. It's Josh Decker with Sentient Wealth Group. We're here to talk about the 2025 mid-year investment outlook. We're going to review what's happened for the first 6 months of this year and look ahead to the next few months of investment opportunities. Our agenda for today, we're going to talk about tariffs and where are we going to go from here. The stock market is up in the first half of 2025, and we see opportunities ahead. Interest rates have remained high, and the Federal Reserve has not cut interest rates as of yet. And also, there were changes to the tax code. We had a July 4 tax bill that was signed, and there are some important changes for all investors. As far as returns go, for the first 6 months of 2025, both U.S. large cap stocks and bonds increased in value. But the real surprise was international stocks earning 19.17% in the first 6 months of the year, and also international small cap stocks earning 14.94% for the first 6 months of the year. The main topic of conversation for 2025 has been the tariff situation. Many investors are wondering, where do we go from here? The maximum tariff estimate as of May 30th, 2025 is approaching 15%, levels we have not seen since the Great Depression. The reason this is important is that tariffs are, in a sense, a tax that will have to be paid by someone as the money goes to the government as trade occurs. It will either be paid by the consumer or the business who sells the product, and that money will be removed from the economy, which in turn could cause less economic growth. Both the ultimate level of the tariffs and the amount of inflation it eventually causes bears watching as 2025 continues. As you can see from this chart, from 1970 to 1980, the dollar dropped 30%. Also, the dollar from 1985 to 1992 dropped 51%. There was another period of time where the dollar dropped from 2002 to 2008, which was 40%. We think that the dollar could continue to fall, at least for the duration of the Trump presidency, which is another 3 years. Based on the history of the dollar, you could see the dollar continue to fall over the next several years. One of the main things that happens when the dollar falls is international assets will appreciate in value. According to the slide, the last time this happened was 2001 to 2008. International stocks beat the United States stock market between 5 and 15% per year during that period. One of the main reactions of the US dollar going down in value is international assets will appreciate in value. So owning international stocks is important for any investor looking to protect against a falling dollar. If the US dollar continues to fall, it's going to be important for all investors to consider holding increased amounts of international stocks. Let's talk about the stock market in 2025. While the US stock market is up about 5% for the first 6 months, we had a decline of up to 19% in April of 2025. This is not unusual, as over the past 45 years, the average decline in any given year would average around 14%. The 19% drop that we experienced in April as the new tariff rates were announced is actually quite normal, as the average drop during any given year is around 14%. Even with this type of intra-year drop, you can see that the market has ended the year with positive returns 75% of the time, and we are certainly on track for that midway through 2025. Going back to 1973, the average bull market in general lasts 70 months. We are only about 33 months into this current bull market, meaning that we could have 3 or more years of upward momentum if history is any guide. As you can see in the following chart, going back to 1988, if an investor invested at a new all-time high, they would have enjoyed the same types of returns or better than somebody who didn't invest on an all-time high. Even though the markets are hitting all-time highs, the data would tell you to keep invested and remain invested during these periods. There is an extreme amount of confidence that continues to carry forward throughout the years. One of the things we look at here at Sentient Wealth Group is consumer confidence. And when consumer confidence is low, stock market returns tend to be pretty good. Current consumer confidence levels would suggest the potential for excellent returns based on the history of this index going back to 1971. Inside the stock market, we think that the next wave of innovation, which is artificial intelligence, provides unbelievable opportunities for growth for most investors. Because of the latest advances in artificial intelligence, it's possible for some firms and organizations to double or triple the amount of work with the same amount of employees. Artificial intelligence is going to try and make every organization more efficient. We think the investment opportunity is going to come when there are a tremendous amount of efficiencies realized by all sorts of firms and all sorts of jobs using artificial intelligence. The reason we encourage investors to invest in technology is when you look at the past 20 years of the technology-focused NASDAQ composite, those returns have averaged approximately 11% per year for the last 20 years. We think it's possible this rate of return continues into the future. I'd like to transition and talk a little bit about interest rates in the year 2025. Interest rates as of June 30th were hovering around 4.25%. Inflation remains at about 2.7%, and the Federal Reserve has said they'd like to see it closer to 2% before they lower interest rates. As you can see from this chart, inflation remains above 2%. The forecasts are for inflation to fall below 2% in the coming years. As inflation falls towards the Federal Reserve's 2% target, it's possible the Fed could cut interest rates in the coming months. We're now going to talk about the tax bill that was just signed July of 2025 and summarize some of the important changes for all investors. There are some new children's savings accounts that were created as a result of this new tax bill. Some of the details are listed here, but if you have questions about these accounts, please contact our office. Some of the key tax changes in this new tax bill apply to people who give to charity and also those over 65. Another tax change is that auto loan interest might be tax deductible for some borrowers. Thank you for watching. All of us at Sentient Wealth Group are excited for the rest of 2025. If you have any questions about your specific situation, please reach out to us today.